Hello. Hello Rakesh, is that audible? Hello. Am I audible? Can you unmute and let me know, please?
Yes, ma'am, you are audible.
Okay, fine. Okay, so today we are going to deal with some important cost accounting standards, and at the same time we are going to practice problems in that cost accounting standards. So usually you expect, apart from the theory questions, mainly you expect problems based on these cost accounting standards. So as of now, we have done with cost accounting standard 1, that is classification of cost, and then we have dealt with capacity determination. We have also done problems on that. So today what I am going to do is we are going to see what is production and operation overheads, and maximum questions actually come from material cost and employee cost, which is very important. I don't know why the volume is too high. I'll just reduce it. Hello? Hello? Yeah, I think this will be fine. Yes. Okay. So let us go through cost accounting standards. Cost accounting standard 3, which talks about production and operation overheads. Okay. So what does this cost accounting standard talks about? How do we determine production and operation overheads? Overhead is always a problematic area, because when it is not, we are not able to map it to a particular thing, it becomes difficult, and the allocation also becomes difficult in case of overheads. So this particular cost accounting standard 3 talks about production and operation overheads. So here if we look at the definitions, mostly the definitions which we have gone through in cost accounting standard 1. So if you see, cost accounting standard 1 is very important from the perspective of definitions, what each and everything means. Okay, so for example, what is an abnormal cost? So abnormal cost, if you refer to cost accounting standard 1, it says an unusual or an atypical cost whose occurrence is usually irregular and unexpected. And do we include abnormal cost into our production overheads? What do you say? Yes. So in any kind of a cost, we never include abnormal cost. Abnormal cost will be reported separately. Then coming to absorption of production or operation overheads. So what is this absorption? Absorption means allocation to a particular cost object. So there is a formula to calculate overhead absorption rate. What is the formula? Production or operation overheads of the activity divided by the volume of the activity. So how many units is produced is the volume of the activity, and what is the cost that you have borne, that will be in rupees, that will be your numerator. That becomes the absorption rate. For example, the rate obtained by dividing the overheads of a machine shop by number of machine hours for which the machine is actually running will give you the overhead absorption rate per machine hour. Got it? So this is an important formula that you got to remember. This is what is the formula given by the cost accounting standard. Then you know what is administrative overheads. Already we have gone through cost accounting standard 1, cost center, cost object, what is fixed cost. Then we were talking about imputed cost, which is nothing but notional cost. That is, we will never include imputed cost in costing records. You should be very clear about it. Imputed cost is never taken into account. Imputed cost is something very notional, which is not going to happen really, and where there is no outflow or inflow of cash. That kind of a cost. Okay. Then coming to indirect employee cost, indirect expenses, indirect materials. Normal capacity, that has already been discussed in cost accounting standard 2. So if we look at normal capacity, it is nothing but volume of production or services achieved or achievable on an average over a period of time under normal circumstances, taking into account the reduction in capacity resulting from the planned maintenance. So last time we did problems on capacity utilization, right, wherein we have done problems on normal capacity too. Maybe what I will do is we will once again visit those problems and write down the formulas here so that it becomes easier. Then coming to production or operation overheads, what does cost accounting standard 1 say about it? The terms production overhead, factory overhead, works overhead and manufacturing overhead denote the same meaning, and it includes administration cost related to production, factory, works or manufacturing. Apart from that, what additionally this particular standard talks about is, in addition to production and operation overhead shall also be classified on the basis of behavior. So when you talk about on the basis of behavior, what is the cost classification on the basis of behavior? Fixed, variable, semi-variable. So that is what it says. So production or operation overheads and fixed production or operation overheads. So we have variable production overheads, semi-variable and fixed overheads. So this is what is an additional definition. Standard cost, of course, it is given under cost accounting standard 1. So it's a predetermined cost which is arrived at on a technical basis. Okay. So cost accounting standard 1 has lot of definitions in it, which is applicable universally across all the cost accounting standards. It's not like cost accounting standard 1 talks something about normal capacity and it's going to be different in another cost accounting standard. It is the guiding principle. So cost accounting standard 1 you can refer for all the definitions. Okay. Then principles of measurement. So how are we going to measure this production and operation overheads? So every standard will have the format. What is the format of cost accounting standard? So if I get into this particular standard, see how it is jotted down. First, introduction. What does the standard deals with? What does it say about it? Then they talk about the objective. What is the main objective behind this cost accounting standard? What is the scope for it? What are the definitions? So usually I start with definitions because objective, scope and other things are the general ones. Then after the definitions we have the principles of measurement. How do we measure in these cases? So there are certain exceptions. So your principles of measurement is very important because only based on this you will be able to solve the problems. What is to be included, what is to be excluded, what are the exceptions, how are we going to disclose? All these things are given under principles of measurement. Okay, under principles of measurement, if you are going to take something as production overhead, okay, in that case, is the production overhead, if those resources are procured from outside, then how will you determine? Whenever there is a procurement happening, let it be material, let it be any kind of a thing, a resource which is procured from outside, it is always the invoice or the agreed price which includes duties and taxes and other expenditure which are directly attributable to this. And if there are certain discounts and stuff, you got to adjust it. So this is universally applicable everywhere. If you are going to procure material from outside, even the same rule holds. If you are going to procure something else, some other resources, which is for the production overhead, which is not directly related to direct material or direct labor or direct expenses, the same thing will be applicable. Okay. What if not procured? If not procured, matlab, you have produced on your own, then the cost of production is applicable. Whatever cost is incurred in producing that particular resource, we'll get into it. That is what they say, shall be determined on the basis of cost incurred in connection therewith. In case of machinery, so this is an example. Machinery spare which is fabricated internally or a repair job carried out internally, it will include cost incurred on material, employees and expenses. So you can directly track it. You can directly say that this is what. Okay. Then any abnormal cost, just a minute. Yes, I just forgot to start the recording. Yes. So now any abnormal cost which is material and quantifiable. Let it be material, let it be quantifiable, whatever may be the case, abnormal cost is always not under the purview of cost accounting records. It needs to be reported separately. I think there is a power cut or something. Yeah. Then, imputed cost, of course, it's not included. In case of production or operation overhead variances. So, well, we have done variances in our inter. We have learned about overhead variances, right? So, in that case, if the variance is normal, then it needs to be included. If the variance is abnormal, it needs to be excluded. Any subsidy, grant, incentive, all these are to be adjusted towards the cost. That means it will be reduced from the cost. Fine, penalty, damages, it's not to be considered. It will form part of reconciliation between cost records and financial records profits. Credits or recoveries relating to it. How do we do that? It shall be deducted because it's a credit or a recovery, where the necessary recovery exceeds the total production or operation overheads. The balance recovery shall be treated as other income. This is one good thing that you got to remember. Because usually what we do, for example, if our total production overheads itself is 10,000, but your recovery is say 11,000. So what about that 1,000 rupees? That will be treated as other income. So वो reconciliation में चला जाएगा. Got it? Any change in the cost accounting principles? Of course, frequent changes are not allowed, but if it is necessary or it is according to some compliance, or this change is going to be much more appropriate in the presentation of cost, in that case, the changes are allowed. So this is the principles of measurement. Okay. Then coming to assignment. How are we going to assign it? The guiding principle is traceability to a cost object in an economically feasible manner, where you can directly relate it to the cost object. देखते ही बता सकते हैं that this pertains to this particular, this is pertaining to this particular cost center and this is a production overhead. What are the two guiding principles? One is cause and effect, another one is benefits received. So what is cause and effect? Cause is the process or operation or activity, and effect is the incurrence of cost. These are the two guiding principles. We have already seen in umpty number of cases wherein we take these two principles. Either we go by cause and effect. Cause matlab the process or operation or the activity itself. That is the cause for which we have incurred the cost. Effect is incurrence of cost. Okay. Benefits received. By this production overhead, what is the benefit you receive? That is what is benefits received. So in case facility is created on a standby or ready to serve basis, the cost shall be assigned on the basis of expected benefits instead of actual. What is this? This is like simulating an environment. You are creating the facility on a standby mode. It's not a permanent one. Just for a standby mode or a ready to serve basis. Agar kuch problem ho, then you use that. In that case, you should not go by the actual occurrence of the incidents. Instead, you go by the estimated benefits out of it. Okay. Then absorption of production or operation overheads. How is that going to be absorbed? In case of variable overheads, it is absorbed based on the actual production. In case of fixed overheads, it shall be absorbed on the basis of normal capacity. This is important. This is what the cost accounting standard says. Because cost accounting standard mein, what they have mentioned, they are looking at production and operation overheads, including the purview, including or from the point of view of the behavior of the cost. So when we talk about the behavior of the cost, it is variable and fixed. If it is going to be variable, how it is going, variable overhead, how it is going to be absorbed? It will be absorbed based on the actual production. How many units you produced? That will have, that is how it is absorbed. But what about fixed overheads? It shall be absorbed based on the normal capacity of that particular plant or production. Presentation, how it needs to be presented? As a separate cost head. We know production overhead, we show it separately. If materials, if it is material, element wise, behavior wise of material, details of production or operation overhead shall be presented. So I circulated few samples of cost audit reports, right? In which there will be a cost audit report where they would have talked in detail about the overheads in their principles. So that is a guiding factor wherein they have given element wise and behavior wise details. Then coming to under absorption and over absorption, any kind of such thing shall be presented in the reconciliation statement. And this tells all about the disclosure, what are the disclosures to be made. But the main thing is, what if credit recoveries are more than the production or operation overheads, how you got to treat it? What are the two guiding principles? In case of variable overheads, how it needs to be absorbed? It should be absorbed on the basis of actual production. And in case of fixed overheads, it shall be absorbed based on the normal capacity. These are the guiding factors. Got it? Any doubts? So actually I am planning to upload all these Excel sheet which I have not yet done. So as and when I update, because it runs into pages, all the cost accounting standards. But I want actually to put the important points for each and every cost accounting standard, so it becomes easier for your revision before the exams. Got it? So surely I'll put it today or by tomorrow and give you the Google link for that. Coming to cost accounting standard 4, which is revised 2018. इसके पहले cost accounting standard was talking about captive consumption. But now, since GST has come in place, from 2018, this cost accounting standard 4 has been dedicated on cost of production or acquisition or supply of goods or provision of services. This is what this particular cost accounting standard talks about. So the concept of cost of production or manufacture is relevant under GST laws. They don't see the sale, they see the goods produced or manufactured. So GST is taking all the things in hold. There is no excise and VAT and all those things, except for few goods which are outside the purview, like the petroleum products are not there under GST. So what does the GST rule states? So there are certain things that the GST rule states that I'll directly go through the thing. Yeah. So this is cost accounting standard 4. Okay. So what does the GST says? As per section 15(1) of the CGST Act, whether the supplier and the recipient of the supply are not related and price is the sole consideration, then what will be the value of supply of goods or services or both? It will be the transaction value. The value that will be determined for that supply of services or goods or both will be the transaction value. Okay. Here the major condition is the supplier and the buyer, that is the recipient of the supplier, are not related. Agar related hoge to then that will come under related party transactions. But over here price is the sole consideration. So you know what is the price at which it's being done. If price is not the sole consideration, if there is something in kind, even that needs to be converted. Okay. So rule 27, 28, 29. So what does this say? So for example, where the supply, so if the transaction value is not there, okay, where the supply of goods or services or both cannot be determined, okay, what we will do? Either we will go by the open market value of such supply, जहाँ पे आपके पास price नहीं है, okay, or if the open market value is not available, then the total consideration in money and any such further amount in money as is equivalent to consideration not in money. So these are all clauses actually under which. So if the value is not determinable under A or B or C, then what it will be? Then that is equivalent to consideration not in money as determined on the basis of cost method or residual method. So each of the GST rule states how we got to consider cost. If the people are not related and if the price is the sole consideration, then you go by the transaction value. If not, you go by the open market value. If there is something in kind, then you got to convert it and then add it together. Then you have rules 27, 28, 29 of the CGST rules provide for the methodology for determination of value of supply under certain situations. As per rule 27, where the supply of goods or services is for a consideration not wholly in money, the value of the supply shall be the open market value. That is, you have received a TV. Okay, you are not paying for that, but you have received a TV. It is something in kind. So you got to convert the value at the open market rate, and that will be the value of supply. If not transaction value, then it should be the open market value. This is the important thing to be noted. As per rule 28, if they are related persons, both between distinct or related persons other than where the supply is made through an agent, shall be the open market value of such supply if it is related. Provision to rule 28 provides that where goods are intended for further supply as such by the recipient, the value shall be an amount equivalent to 90% of the price charged for the supply of goods like kind and quality by the recipient to his customer not being a related person. That is, this is further supply. So you received it and you are supplying to some other person. At that time, it will be equivalent to 90% of the price charged. Where a recipient is eligible for ITC, input tax credit, the value declared in the invoice shall be deemed to be the open market value of goods or services. And as per rule 29, value of supply of goods between the principal and his agent shall be the open market value of the goods being supplied, or at the option of the supplier be 90% of the price charged for the supply of goods like kind and quality by the recipient to his customer who is not being a related person. So here we are talking about person who are not related, because related party transaction has a separate cost accounting standard through which we will be determining the cost. Okay, so this is how it works. The objective, of course, the scope, definitions, once again it goes by what is abnormal cost, what is actual capacity utilization. Actual capacity utilization is always expressed as a percentage of installed capacity. This we have seen in our problem, right? Similarly, administrative overheads we have seen what are all included in administrative overheads, but what does it exclude? Production overheads, marketing overheads and finance cost. Finance cost is always excluded, whether let it be for working capital or long-term capital, it will be shown separately. It will not be mixed with any of the overheads. How are we going to allocate the overheads? It is assigning total amount of an item of cost directly to a cost object, if it is directly traceable. Amortization is the systematic allocation of the depreciable amount of an intangible asset over its useful life. So you know, depreciation is for tangible assets and amortization is for intangible assets. What is byproduct? Byproduct which is produced incidentally during the production. Like for example, sugar industry has many byproducts. Like bagasse is one of the byproduct, compost is a byproduct, then biogas, then ethanol, all these are all byproducts. Cost is a measurement in monetary terms, that you know very well. Cost of purchase or acquisition, so you know it includes all the duties and other things. Cost of production of goods, this is what we have learnt in our cost accounting standard 3. What is cost of production of a product consist of? That is CAS3. To arrive at the cost of production of goods dispatched for captive consumption, adjustment for stock in work in progress, finished goods, recoveries of sales of scrap, wastages, etc. So cost of production or cost of manufacturing or cost of processing, it determine the same meaning. Okay, and then what about defectives? This is very important. Material product or intermediate products that do not meet quality standards is called defective product. What do you do with defective product? One thing is you can do a rework on it. That will be sent once again for a rework and you will get those things done. Or it will be rejected and it will be scrapped. Two things can happen to defectives. What about reworks? Reworks include repairs, reconditioning, retrofitment and refurbishing. Refurb part, they call that as refurb part. For example, there are like for example in Sony, okay, we have experienced one thing, like those who are working as employees, right, in Sony, they get an option, that is through Lucky Dip, they can buy this refurbed TV. What will be this refurbed TV is nothing but, there will be no damage, or there might be a small damage in the package, there could be a small scratch somewhere which is not noticeable. Those things will get rejected out of quality check and those things are sold at subsidized rate to the employees. इतना subsidized रहता है, like 60,000 worth TV, you will get it at 30,000 itself. For a small scratch just behind your TV or for a scratch on the package or something. So this is called refurbed. Refurb matlab that which is reworked, which is not entirely scrapped. Then coming to rejects, defectives which cannot meet the quality standards even after putting in additional resources. Whatever you do, you cannot set it right. Once it is rejected, it is rejected. You cannot make it right. So what will happen? Rejects may be disposed of as waste or sold for salvage value or recycled in the production process. So the treatment of defects is, this is how it happens. Either it can be reworked or it can be rejected. You know what is depreciation, how it is allocated every year. So that is, I can ignore it. Development cost. Development cost is the cost of application of research findings or other knowledge to a plan or design for a production of new or substantially improved materials, products. So this is basically part of your research and development expenses. Then direct expenses, you know very well. Employee cost. Employee cost we will do in detail as per cost accounting standard 7, which talks about employee cost. Direct employee cost, which is directly related to a cost center. Indirect, which is not directly attributable to a cost object. Excess capacity utilization, idle capacity, this we have already gone through in our capacity determination cost accounting standard 2. Joint cost. Joint cost are the cost of common resources which is used to produce more than one product. Joint product, that is the products which are simultaneously produced. Out of the process it comes simultaneously. Material consumed. Material consumed can be indigenous material, imported materials, bought out items or self-manufactured, process materials. All these kind of materials will come into it. Okay, so it's always the cost of acquisition that we pay, freight inwards, insurance, other expenses, net of duties and taxes, trade discounts, rebates, subsidies. This is applicable everywhere. Okay. Then what does this particular standard talks about? So other things are all your definitions. Comes the principles of measurement. So this is the main thing based on which your problems will be there. Got it? So what is the principle of measurement? Cost of production or acquisition of goods or provision of services shall be measured for each types of goods or services separately. And how do we do that? It is an aggregate of direct and indirect cost relating to the production or acquisition or supply. It can be produced or acquired. Cost of provision of each type of service shall be aggregate of direct and indirect cost relating to that service activity. What is your material cost in that? It shall be separately determined for each type of material, that is for indigenous material, imported material, bought out components, process materials and stuff. The material cost of normal scrap, defectives which are rejects shall be included in the cost of produced or services produced. Employee cost for each of goods or services which can be measured separately. Then we have cost of utilities consumed. This will be also taken into consideration. Cost of packing. So we take the packing cost. Direct expenses for the production. High value spare shall be recognized as property, plant and equipment when they meet the definition of PPE. We call that in short PPE. That is nothing but property, plant and equipment, and depreciation accordingly. Repairs and maintenance cost is also taken for them separately. Depreciation and amortization is also done. Depreciation in case of tangible and amortization in case of intangible goods. And then coming to R&D cost incurred for the production or acquisition in case till the split of point. So do you remember what is the split of point? Split of point matlab us point tak dono products gets produced same. But after the split of point, the processing or the procedure differs from one product to another, where you can individually identify the cost. Till one level it is the same. After that you can easily identify. They are going to go through different processes. So that is what is the split of point. Then royalty and technical know-how, royalty paid as a consideration, quality control cost if it is incurred in-house, even that needs to be included, production or operation overheads and all this stuff. So let's go through this industry specific operating expenses, which is one of the important thing in your abridged cost statement. What is this industry specific operating expense? That which is very peculiar or specific to a particular kind of an industry. For example, if you see inside the company may calculate cost center or cost object wise conversion. It may be summarized. Example, like industry specific operating expenses instead of element wise conversion cost. Example, textile industry, spinning, weaving, processing. So industry specific operating expenses, I'll give you an example where you have to acquire license. Okay, acquire license for a highway kind of a business. So that is something specific to that particular industry. So those will be covered under industry specific operating expenses. Now what shall we do is, we shall go through a problem to better understand this cost accounting standard. So I will take you through the problem from our book. Okay, so I will tell you the page number. So these cost accounting standards are very